All right, so anyone who's plugged into the business world knows that sustainability is what everyone's talking about these days, but trying to keep up with all the latest trends and, all the investor moves, it's like a full-time job in itself. And that's why we're here today. We're diving deep into the 2024 Proxy season, and specifically, we're going to be looking at all those climate and ESG proposals everyone's talking about. And to help us understand all this, we've got our expert with us,
Happy to be here.
ready to unpack this for us.
Yeah, absolutely. So this year has been particularly interesting because we saw a record number of environmental and social proposals,
Right.
but the support that they're getting from investors has kind of plateaued.
Interesting. So you'd think with all the momentum behind sustainability, these proposals would be sailing right through.
Yeah, it's a little bit of a head scratcher, right?
Yeah.
Well, I think the key takeaway here is that investors are getting a lot more discerning.
Okay.
It's no longer enough to just throw a proposal out there and then expect, just overwhelming support. They're looking for really focused, impactful action, not just a check-the-box approach.
So it's not that there's a lack of interest. It's more like investors are raising the bar.
Precisely. They're doing their homework. Now they're really digging into company disclosures and scrutinizing whether a proposal is really going to move the needle. In fact, only 17% of these proposals got more than 30% support this year, which is a noticeable dip from previous years.
Wow, 17%. That's a pretty clear message to companies that they need to step up their game.
Yeah.
What's driving the shift towards, more strategic voting? Is it just, what some people are calling investor fatigue?
Well, I think it's more nuanced than that.
Yeah.
You know, companies are also upping their game when it comes to sustainability reporting.
Okay.
And I think that this increased transparency, means that some shareholder resolutions might appear less urgent,
Right.
especially if the company is already addressing, those concerns that are being raised in the proposal.
Makes sense.
And I think investors are recognizing this, and they're adjusting their voting strategies accordingly.
Yeah, it makes sense. Why push for something if a company is already taking steps in the right direction?
Exactly.
It's about focusing that energy where it's really needed.
Right.
Speaking of things that might need a little extra focus, let's talk about those, say, on climate resolutions. A couple of years ago, these were all over the place, but it seems like they've lost a little steam lately.
Yeah.
What's behind this decline?
Yeah. I think it's, you have the initial hype,
Yeah.
and now we're moving into a more pragmatic phase. And one factor is that there's no real standardized global framework for these, say, on climate resolutions.
Okay.
So it makes it really difficult for investors to compare plans across different companies and regions.
Right. So almost like you're trying to judge a talent show, but all the acts are performing in a different language.
Exactly.
Makes it tough to evaluate.
Yeah, it's difficult to kind of make those apples-to-apples comparisons, and that's the challenge investors are running into here.
So we need like a universal language for climate action if we really want investors to get behind it.
Yeah.
That makes a lot of sense. What are some of the other factors that are contributing to this shift?
Well, a lot of investors are shifting tactics. So they're moving away from these broad, say, on climate votes, and they're focusing instead on director elections.
Okay.
So they're using their votes to directly impact who sits on these boards, and they're really pushing for leaders with strong climate credentials.
So putting their money where their mouth is, electing those individuals who will champion these issues from within.
Exactly. And then there's also a growing sentiment among some investors that certain climate proposals are, they're overly prescriptive,
Okay.
and that, it's better for companies to take the lead in developing their own climate strategies
Right.
rather than having those dictated by, shareholder resolutions.
Interesting. So it's about finding that balance, between investor pressure and giving companies the space to innovate and actually implement solutions. But it sounds like this shift away from, say, on climate resolutions doesn't necessarily mean that investors are less concerned about climate change.
No, not at all.
It's more like a strategic evolution,
Right.
finding, better ways to make an impact.
It's about recognizing the complexity
Right.
of the issue and looking for more targeted, impactful levers for change.
Now, we've been talking about investors kind of broadly, but, our research showed that there's a difference between how European and U.S. asset managers are approaching this whole climate action thing. It's almost like they're operating in completely different worlds.
Yeah.
What's driving that?
Yeah, you're right. There is a pretty big difference there. It's almost like European asset managers are setting the gold standard when it comes to these climate resolutions. They voted in favor of these 88% of the time, on average.
88%. Wow. So they're really putting their money where their mouth is. How do those numbers compare to what we see, with U.S. asset managers?
Yeah, so U.S. asset managers were only voting in favor of those similar resolutions about 25% of the time.
Wow, that's a big difference. Makes you wonder what's going on there. Is it just that European investors are, naturally more environmental conscious than their U.S. counterparts?
Well, it's never that simple. Um, I think a lot of it has to do with the different regulatory landscapes.
Yeah.
Like Europe has really been ahead of the curve when it comes to climate regulations and all those disclosure requirements.
Right.
And that just creates a different playing field for companies and a different set of expectations for the investors.
So it's partly, regulations driving action, and then that's leading to a more proactive approach from European asset managers.
Exactly. And I think you also can't discount, there's a growing sense of urgency around climate change in Europe. They're experiencing those heat waves and droughts and floods more frequently and more intensely than a lot of other parts of the world.
Yeah, they're really seeing those climate impacts, closer to home.
Exactly. And that's definitely influencing how investors think about this.
Makes sense. But then you look at the US and it's like those alarm bells haven't been quite as loud. Why is that?
Well, I think the political landscape plays a role here. There's been a lot of pushback against ESG investing in the U.S., particularly from certain political groups who see it as a threat to those traditional industries.
Right, so it becomes not just an environmental issue or even an economic issue. It's this whole other layer of, political ideologies and priorities.
Absolutely, and that puts U.S. asset managers in kind of a tough spot,
Hmm.
especially compared to their European counterparts who aren't facing the same level of political pressure on this particular issue.
Right. It's a lot to balance.
Yeah, and I think, that example we talked about earlier with Amundi, that European firm that's taking a really hard line on these climate resolutions.
Right. They were basically saying, we expect more, and we're not afraid to withhold our support to show you that we're serious."
Exactly. And that says a lot about how much they're prioritizing this issue.
Yeah.
They're not just voting yes or no. They're actually trying to use their influence to drive real change.
It shows real commitment.
Hmm.
But at the end of the day, it's not just about doing the right thing for the planet. It's also about, making smart investment.
Exactly. Investors are recognizing that climate change is a financial risk. This isn't some, side issue anymore. This is a material risk that can really impact a company's bottom line.
And that brings us to another important part of this whole thing, reputation.
Yeah.
It's not just about the votes themselves, but what those votes say about an asset manager and how investors perceive them.
Yeah, climate voting has become a major reputational issue.
Yeah.
Investors are watching these votes very, very carefully,
Hmm.
and they're really quick to call out hypocrisy. Asset managers, they know that they can't risk being labeled as greenwashers, talking a big game about sustainability, but then their voting record tells a different story.
Transparency is key here. Investors need to know why those votes are happening, especially when an asset manager votes against a climate resolution.
Exactly.
They want to know that their money is being managed by someone who's walking the walk, not just talking the talk.
You got transparency builds trust, and trust is incredibly valuable.
Especially in a world where investors have so many options.
Exactly.
This has been so insightful. I really appreciate your expertise. So for our listeners out there who are trying to make sense of all of this, what are some key takeaways? What should they be paying attention to when they're trying to evaluate an asset manager's approach to climate voting?
Well, first and foremost, look for consistency. Do their voting records actually match up with what they're saying publicly about climate change?
So look beyond the marketing and the PR.
Exactly. Actions speak louder than words. And then, pay attention to how they're balancing engagement with their actual voting. Some asset managers prefer to work more behind the scenes and they engage directly with companies to push for change. Others are more comfortable, taking a public stance through their votes.
Right.
There's not necessarily a right or wrong answer there.
Yeah.
But I think it's just important to understand, what their approach is.
Right. Find an asset manager whose strategy, really aligns with your values and your investment goals.
Exactly. And then finally, I would say keep an eye out for leadership who's going above and beyond just voting yes or no and actually trying to shape the agenda.
Right. Who are the real leaders in the space?
Exactly. Those are the ones who are really moving the needle when it comes to climate action.
Yeah. And that's what makes this whole conversation so interesting. It's not just about following the money. It's about understanding, the values and the strategies and all the different forces that are shaping the future of sustainable investing.
Complex.
Yeah. And that future is being written right now. This is all still evolving. And I think it's going to be really interesting to see how these trends play out in the years to come.
For sure.
And for everyone listening, we would love to hear from you. How do you think asset managers are going to approach climate voting, in the future? How is that going to change? What kind of impact could it have on the companies that they invest in? These are big questions, no easy answers, but definitely worth thinking about.
A huge thank you to our expert for taking us on this deep dive into the 2024 proxy season. Until next time, keep those thinking caps on.